All right, we're going to talk about sneaky good investments in crypto. They don't have to be coins, but they're all actually like things that might blow up, but things that could be sneaky good that maybe you have not thought of. So the first thing we're going to talk about is like the one in my last video, Coinbase. Coinbase, they're involved with the Aladdin thing with BlackRock. They're being used as the custodian for EDX. They're also the surveillance sharing exchange for BlackRock, Fidelity, Citadel, etc. They got a lot of things going for them. And the crypto bear market has hit Coinbase shares pretty hard. So I do actually think that's going to be a fairly safe investment. Obviously, this is not financial advice, it's just my opinion. I think they're a fairly safe investment. And realistically, they look to be a pretty good one. Undeniable, folks, undeniable. The second one is Grayscale shares. Why? Grayscale shares is pegged to Bitcoin, but they're at a 30% discount. Now, that's the lowest amount of discount for a while now because they were at a 60% discount when Bitcoin was at $15,000, $16,000. So if you had bought that then, you would have actually gained way more than Bitcoin's appreciation price because you would have gained the entire Bitcoin appreciation price and you would have also gained the 30% uppage in or decrease in discount. And I think that will actually continue. Grayscale was actually selling at a premium in the last bull market. I don't know if that'll happen again in this bull market, but I think it'll sell at least at price. And at price means 30% more profit than Bitcoin can get you. I mean, that's got to be good, right? You got to like the plus 30% profit plus what Bitcoin appreciates at. So Grayscale shares, because of that discount, it actually might be a really, really interesting investment to look at. Of course, the downside with Grayscale is there is a small possibility that the entire fund could go kaput. I don't think it will, but that's really your decision on what you think it will or will not do. Not really gonna comment on that. The third one is FTX. You might think I'm crazy for this, but John Ray III is actually moving ahead with FTX's reboot. FTX's price is really, really low right now because obviously FTX died. But that's not the thing about it. Like the reboot could actually drive up FTX price. It won't probably be as high as what it was because FTX, let's be honest, the brand is like damaged goods, right? It's definitely like damaged goods at this point. But the thing is, like, even if it's damaged goods, even if it reaches half its price that it was, it's still pretty good returns. And I think there's a decent chance it'll do that. John Ray III is not Sam Bankman-Fried. The original Sam Bankman-Fried team is essentially gone. So they're no longer part of the equation. So it's probably not a scam. It's damaged goods, so there's a good chance it'll fail. But the price is super, super depressed right now because it did fail a while ago. So that might be something that you really want to think about. Maybe not, but I'm just saying there's a possibility. The fourth one is ARK Invest, Cathie Woods. Now, Cathie Woods has been like really, really bad at predicting anything when it comes to crypto. So I would definitely take this one with a small grain of salt or maybe a giant pile of salt. But with a bull market coming up, I mean, she's got to make money, right? And these crypto companies are dependent on like the crypto market, Bitcoin and other coins. So I think like ARK Invest, I definitely think will actually go up in value. So that might be something, the funds of ARK Invest you might want to like look at. Wouldn't bet my money on Cathie Woods, but you got to be really, really, really unlucky to not make any money when the bull market actually returns in these funds. And you could make significantly more than Bitcoin and Ethereum and those bigger coins for these funds. Of course, things like Marathon Mining, mining companies, they're going to have exponential gains when compared to Bitcoin because all these mining companies, they have a baseline of cost. Anything above that cost is going to exponentially be profit. Anything below that cost is going to be exponentially negative profit. So we do have to like look at that. So yeah, that is actually a factor to actually look at for right now. MicroStrategy, obviously, Michael Saylor, he's massively buying amounts of Bitcoin. He'll make a lot of money, so MicroStrategy shares might go up. So any kind of like Bitcoin mining stock or Bitcoin like investment stock, you could actually look at right now. But you got to be careful with those because A, you got to make sure they're not a scam because there's going to be a lot of scams. And B, you got to make sure that they don't die before the bull market comes because that's always a big possibility. So those are sneaky good investments in crypto that you could think about. All of them carry risk. I think Coinbase carries the least risk, but they could make for much greater rewards than what you're seeing right now. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.